Time for the market report. Prices slipping back again.
Indeed they are. We'll get into it and this month's WASDE. But first, the numbers. What were the week's biggest gains and losses? And then, this month's WASDE report. What did it have to tell us? And finally, in our row report, we discuss what's causing prices to slip back. So, markets closed split with row crops trending down while livestock going up. Let's take a look. The week's biggest gain, live cattle up over 9.5 cents. That's more than a 4% increase from the previous week. The week's biggest loss, soybeans down 32.5 cents, nearly a 3% decrease from the previous week. So this month's WASDE report dropped and had a good bit to say about current production and stocks both domestically and internationally. Seems there's not a lot of big changes over the past month. Nevertheless, here's what it had to say.
U.S. wheat supply and demand estimates are unchanged from last month, with some slight changes in feed and residual use. Season average farm price, $5 per bushel. Global wheat supplies up due to higher production in Canada, Argentina, the EU, and Russia. Consumption raised as well due to feed and residual use. Exports raised too, mostly from Australia, Canada, and Argentina. U.S. corn exports up 125 million bushels, while ending stocks down, the same reflecting export numbers. Season average farm price, $4 per bushel. Global corn production down, namely in Ukraine, Canada, Nigeria, Indonesia, and Senegal, reflecting a number of factors including weather and less planted acres. Exports raised for the U.S. but lowered for Ukraine. Global stocks at about 279 million tons. U.S. rice supplies down due to lower imports. Exports too reduced by 2 million hundredweight due to slow sales to Mexico and Latin America. Season average farm price $11.60 per hundredweight. Global rice supplies raised despite lower production due to higher beginning stocks. World consumption also down by 500,000 tons, while trade forecast up over 250,000 tons due to increases in Burma and China. Ending stocks about 189 million tons. U.S. soybean supply, use, and price projections are unchanged this month. Season average farm price $10.50 per bushel. Global soybean production and crush up nearly 1 million tons due to higher crops in Russia and India. Exports lowered due to less shipments from Ukraine and Benin. Ending stocks increased about 500,000 tons due to higher stocks in Brazil and Russia. U.S. beef production up due to rate of slaughter and higher dressed weights. Pork lowered due to slower slaughter rate. Broiler and turkey production up based on industry data. Egg production unchanged. Milk production forecast unchanged from last month. Butter price forecast slightly up while cheese slightly down, and non-fat dry milk and whey prices unchanged. All milk price forecast $21 per hundredweight. U.S. cotton production raised 1% due to increased yields in the Southeast and Delta. Mill use down to about 1.5 million bales, the lowest in 150 years. Projected season average farm price 60 cents per pound. Global cotton production down by 3,000 bales due to less acreage, while consumption also down the same amount due to lower mill use in Brazil, the U.S., and Central America. Global trade down 250,000 bales, while ending stocks raised 40,000 bales.
So now you know what things look like on a national basis. What are the experts talking about? Market analyst John Roach says corn, despite prices dropping, is the result of us having an abundance and we're using it.
There is some question about whether yields were as good as what the USDA had estimated in the last reports. We'll learn more in January for sure. But the ethanol demand has been excellent. In fact, this week we set a new record, a weekly record on ethanol production, and we're running at a faster pace than what the USDA forecast is right now. The demand from an export side on corn is also running at a faster pace. I think we're running about 7% ahead of the pace we would normally have in order to reach the USDA forecast. But again, we have a lot of corn. We're eating through a very big crop. When you look at it from a graphic standpoint, this year stands out considerably larger production than what we've seen in past years. And so we just have to eat our way through that. We think we're into a time frame on corn, and quite frankly on all the row crops that we raise. We're in one of those time frames where we came off of very big prices and tight supplies into a period of time with big production in South America as well as in the Northern Hemisphere. And now we have big inventories of everything, actually. And so we think that puts us into relatively narrow price ranges for the foreseeable future until something changes. And of course, you can change that in the Southern Hemisphere right now if the weather problems persist in some areas, and there are some weather issues there. We did see Dr. Cordonnier pull his bean estimate down for Brazil, 1 million tons this week. And so there is some possibility out there, and that's given us some of the price advance that we've had. But the reality is that we have big supplies, and that means that we're going to have a confined range of trade until that changes. Again, keep your eye on the Southern Hemisphere, and then in the Northern Hemisphere, when we get into our growing conditions and our situation. But at the moment, nobody's very worried about weather, or very worried enough about weather to give us much higher prices. So that's what's keeping the lid on the corn market, even though demand has been very strong.
And that's it for a deeper look into the markets. Looks like row crops evening out while livestock prices rising.